One of the main goals for all dividend growth investors is simple, yet so many investors seem to overcomplicate it. The goal I'm talking about is to grow your annual dividend income to a point to where it completely covers all of your bills and even surpasses the active income that you might make at your day job. At this point, the dividend investor would be essentially financially free, which once again is the main goal for many dividend investors, including myself. But what many investors seem to miss is that there are so many tried and true methods to reach this point without even working all that hard. Now in this video, we're going to analyze one of the best long-term dividend growth ETFs offered in the market currently, at least in my opinion, and show you exactly how just $50,000 invested into this ETF could allow any investor to reach financial freedom and have the dividend income generated from this ETF to surpass the amount that they're making at their day job. Now stay tuned because we're going to go through all this and more. Right up to you, please drop a like in this video and subscribe for more content like this in the future. Now, although there's so many different options in investment vehicles, especially different high quality dividend growth ETFs, that in theory could get investors to the exact same point. In this video, we are going to dig into the Schwab US Dividend Equity ETF and later on explain how just $50,000 invested into this ETF could actually get an investor to financial freedom. Now, to those that might be a little bit newer when it comes to the SCHD ETF, the Schwab US Dividend Equity ETF's objective is to track as closely as possible, before fees, the total return of the Dow Jones US Dividend 100 Index. Now, the Schwab US Dividend Equity ETF is an exchange-traded fund that is managed and launched by Charles Schwab. This ETF invests in markets of the United States. It invests in stocks of companies operating across energy, material, industrial, consumer discretionary, consumer staples, healthcare, financials, information technology, and even other sectors in that. It invests in growth and value stocks across diversified market capitalizations, and it of course invests in dividend-paying stocks. Now, some really important facts when it comes to this investment vehicle, SCHD, the fund's inception date was October 20th, 2011. So this ETF has been around for a while, and why I find that important is because we have a decent amount of track record to go off of, and even though past performance does not guarantee future performance, it's still nice to have some data to go off. Now, SCHD is one of the largest ETFs across the market at almost $49 billion of total net assets. The expense ratio is very cheap at just 0.06%, making it one of the cheapest ETFs to hold long term, which is definitely important, especially as investors get more and more invested as time goes on. Now, as we said, the index name that it tracks is the Dow Jones US Dividend 100 Index, and we're going to go over the holdings in this index in a second here, and I'm going to explain why this is so important. Now, looking a little bit deeper into SCHD, it's currently trading at around $74 per share, which I think for long-term investors could be somewhat of a buying opportunity, considering it's pretty close to being at the middle of the 52-week range at $65.96 and $79.49. Now, SCHD is up 185% over the last 12 or 13 years or so, and this is of course not counting dividends. I'm going to show you in a second here exactly how much it's up if we are counting dividends as well, and it's probably going to blow some of your minds. Now, there's many reasons on why I love the SCHD ETF and why it's slowly becoming one of the largest holdings in my overall 7-figure dividend portfolio. The reason being is that SCHD is heavily diversified, with the holding breakdowns being industrials around 18%, financials 15%, healthcare 15%, consumer defensive 12%, technology at 12%, consumer cyclical at 9%, energy at 9%, communications at 4%, basic material at 2%, and utilities under 1%. Now, with an ETF that's this diversified, you don't necessarily have to worry about 1, 2, or 3 stocks performing bad. This ETF consistently has around 100 different holdings in it. And with the top 10 holdings being things like Broadcom, the Home Depot, AbbVie, Cisco, UPS, Pepsi, Coca-Cola, Amgen, Chevron, and Texas Instruments. These are companies that all have a few things in common. They've been around for a while, they've been paying dividends for a while, and they've all been raising their dividends consistently over time. Which brings me into the next point on why I love this ETF. SCHD has a trailing 12-month dividend yield of 3.51%. And although 3.5% isn't the highest starting yield across the market when it comes to stocks or even ETFs, if you look at the capital appreciation that this ETF has seen over just the past 5 or 10 years, if history were to repeat itself, investors are not only going to be cashing in off the dividend, but also the price of the ETF over time. Now, some more very important metrics to know is that SCHD has a trailing 12-month dividend growth rate of 7.13%. Now, the dividend growth rate is an annualized percentage rate of growth that the particular dividend undergoes compared to a 12-month period before that. So obviously, the higher the dividend growth rate, the better. And SCHD, compared to many other ETFs, has a very, very particularly high dividend growth rate. If you look at over the last 3 years, 12.33%, the last 5 years, 13.92%, and the last 10 years, 11.32%. So even though the most recent trailing 12-month dividend growth rate is only 7.13%, if SCHD does see some massive dividend raises in the next few quarters. The dividend growth rate will once again be above 10% most likely, which means that investors that get in early can expect to get paid more and more quarter by quarter in the future. And speaking of getting paid more and more over time, if you look at SCHD's dividend history payouts, since the fund's inception, this ETF was only paying around 12 or 14 cents back in the early days of the ETF. Currently, SCHD is paying around 66 or even 70 cents per share per quarter, which is making the dividend payout around 4 or 5 times as much as it previously paid around 4 or 5 years ago. Now, why exactly is dividend growth rate so important? Well, you're going to see here in a second, with just a $50,000 initial investment and the dividends being reinvested, you're going to see how just a, relatively speaking, small amount of money invested into a fund like this that has a nice starting dividend and some massive dividend growth will really start to snowball the initial principal and grow the overall amount of dividends generated very substantially over time. Now, that being said, if we were to go into this dividend calculator and type in $50,000 of initial principal, so in theory, this is if an investor was to invest $50,000 into SCHD early-ish on in their investing career, with SCHD having a starting dividend yield of around 3.49%, an annual dividend amount increase of around 8%, which again, this could be higher or lower, of course, an expected annual share price appreciation at around 4%, dividend reinvestment turned on, which means all the dividends are once again going to be reinvested, and 30 years invested. Let's see exactly what we get. So for the first year of investing, this investor would have $50,000 in theory invested into the SCHD ETF, earning around $1,767 of annual dividends right off the bat. With no more money contributed, just again reinvesting all the dividends, this investor would have $53,000 of principal and $1,965 of annual dividends. Now, as we go down further and further down the list, you are going to see the annual dividends get bigger and bigger because, of course, the dividends are being reinvested to buy more shares of SCHD. And of course, on top of that, SCHD has a history of raising their dividends, which again means that investors are going to be expected to get paid more and more as time goes on. By year number 5, $65,000 worth of SCHD and over $2,700 a year in dividends. By year number 10, this investor already has almost $100,000 invested, with almost $4,800 a year in dividends. By year number 15, this investor would have just under $145,000 and just shy of $9,000 in dividends. Now, from year number 15 to 30, you are really going to see the compounding curve really take place, and the numbers are going to get bigger at a faster and faster rate. Now, this is because the power of compounding works that way. The longer you stay invested and the longer you let the dividends reinvest, the numbers are just going to get bigger and bigger and bigger. By year number 20, $228,000 of SCHD would generate just shy of $17,000 a year in dividends. By year number 25, $381,000 and $34,000 a year in dividends. And by year number 30, if this investor just invested $50,000, never added another penny to this portfolio, just let the dividends do their thing, this investor in theory would have $678,000 invested into SCHD and over $73,000 a year in dividends. So what this really just goes to show is that investors don't need to have millions upon millions of dollars invested into a high quality dividend growth ETF like SCHD or even other ETFs. And also this really drives home the point that investors that stay invested long term and just keep reinvesting and let the snowball do its thing, the overall portfolio and of course the dividends paid on an annual basis are going to get bigger and bigger and bigger. But I want to hear what you guys think down below as far as a high quality long-term dividend growth ETF. What's your favorite, and let us know why. If you enjoyed this video, make sure to please drop a like on it and subscribe for more content like this in the future. Thanks for stopping by as always, guys, and I'll see you in the next one.